The recent collapse of TerraUSD has brought new interest to the unique category of currency and commodity-backed cryptocurrencies. Unfortunately, not necessarily in a good way. Popularly known as stablecoins, these asset-backed cryptocurrencies are meant to provide a place of stability in volatile markets. As TerraUSD has shown, however, this may not always be the case. Seeking to be a haven for true stability, there's a project out there backed by one of the most well-established commodities. And in today's video, we're breaking down everything you need to know about PAX Gold. Welcome to Crypto Sketch 101. We're the #1 go-to spot for all things crypto, and we're glad you've stopped by. If you love cryptos as much as we do, please give this video a like, and be sure to subscribe to our channel. In today's video, we're examining the unique way that Paxos is seeking to bring gold to the blockchain. We'll dive deep into the PAX Gold project and examine everything you need to know, including what it is, and what sets it apart from other currency and commodity-backed cryptos. There's a lot to cover, so let's get into it. Before we get too far into what makes PAX Gold so unique, it's important to understand some of the criticisms of the world's most popular stablecoins. The first of which is that almost all of them are unregulated. While they may have some sort of oversight, almost none of them have true oversight from a recognized regulatory body such as the Federal Reserve Board. Secondly, they are not truly backed by their underlying assets. Instead, they are oftentimes backed by illiquid or risky debt obligations. Tether, for example, the world's largest stablecoin, with a near $67 billion market cap, is labeled as a stablecoin that mirrors the price of the US dollar. However, it is not legitimately backed on a 1-to-1 ratio with US dollar equivalents. In fact, only around 6% of its reserves are in cash and bank deposits. The majority of its reserves are held in commercial paper, certificates of deposits, and treasury bills. Both lack of regulations and debt-backed reserves expose investors to a number of risks, including illiquidity risk, credit risk, and the inability to get dollars back upon token redemption. Where most stablecoins lack, however, PAX Gold excels, making it unique amongst its stablecoin peers. PAX Gold is a gold-backed cryptocurrency on the Ethereum blockchain. PAX Gold gives investors the mobility and speed of a digital asset, while providing its owners with the benefit of real, physical, gold bar ownership. It represents physical gold bars, and its value is directly tied to the market value of the physical gold that it represents. Each PAX Gold token is backed by 1 fine troy ounce of physical gold, secured in Brinks vaults, and held in custody by the Paxos Trust Company. Investors can redeem PAX Gold for bullion bars if they choose to do so at any time. As such, PAX Gold ownership represents benefits that are favorable in both the digital as well as physical world. Additionally, PAX Gold has true regulation. According to its white paper, in July of 2019, the New York State Department of Financial Services granted regulatory approval for the gold-backed cryptocurrency. The Paxos Trust Company also requires that Know Your Customer and anti-money laundering verification be mandatory, a practice mostly ignored throughout the cryptocurrency community. Aside from actual, physical gold ownership and peace-of-mind regulation, PAX Gold has a few other advantages as well. Through the process of tokenization, PAX Gold allows investors to have ownership of gold in fractional amounts. The process reduces the barrier to entry and makes gold ownership more accessible to those who would otherwise be unable to purchase entire gold bars. PAX Gold is available on a number of exchanges throughout the world, making it easy to buy, sell, and trade. PAX Gold also boasts a competitive fee structure. Token generation and redemption in a Paxos wallet is typically less than 1%, has minimum Ethereum transaction fees of around 0.02%, and no storage fees. PAX Gold is flexible as well. In addition to being redeemed for actual, physical gold, it can be exchanged or redeemed for fiat currencies or traded for other digital currencies as well. While comparisons can be made to gold ETFs, the biggest difference between gold ETFs and PAX Gold is PAX Gold's biggest selling point. With PAX Gold, investors have actual ownership of gold, whereas gold ETF investors do not. Accessibility is another factor as well. Within the US, ETF investing is mostly straightforward and simple. Investors can access gold ETFs through many different methods and through brokerage firms. It's easy to forget that it can be more challenging for remote individuals in different parts of the world. At times, these individuals may have to go through more challenging steps in order to invest. Additional steps may include currency conversions, and even added costs and commissions as well. Additionally, major gold ETFs typically have significantly longer settlement time. Because PAX Gold settlement takes place on the blockchain, time to settlement is near instant in comparison to ETF settlements that may take up to 2 days. Fees can also be an issue when it comes to gold ETFs. Custody fees associated with major gold ETFs can range between 19 and 40 basis points per year. As previously noted, however, PAX Gold owners incur no custody fees. Although it is perhaps the most popular gold-backed cryptocurrency, PAX Gold certainly isn't the only one. Being as it is the largest stablecoin and third largest cryptocurrency, trailing only behind Bitcoin and Ethereum, it should come as no surprise that Tether also has a gold-backed cryptocurrency known as Tether Gold. Tether Gold shares a number of similarities to PAX Gold. Like PAX Gold, each Tether Gold token is backed by 1 troy fine ounce of gold. Its gold reserves are held in a Swiss vault, and owners can take physical delivery of their gold or exchange it for fiat. Like the others, Perth Mint Gold tokens are backed by and fully redeemable for physical gold, although liquidity is sparse. Perth Mint Gold tokens differentiate themselves a bit though in that they are backed by a government entity. In this case, the Government of Western Australia. PMGT tokens have 0 fees for custody, storage, and insurance, and are seen as competitive alternatives to traditional gold products such as gold ETFs. Other gold-backed cryptocurrencies include Digix Gold, a product of Singapore-based entity Digix Global. DGX tokens each represent 1 gram of gold that are held in vaults in Singapore, as well as Canada. Digix Gold is substantially smaller than its competitors with a market cap currently around $800,000. In order to exchange the tokens for physical gold, owners are required to pay a 1% fee. However, Digix Gold does cover the cost of gold storage. Also out of Australia, Meld Gold has partnered with blockchain protocol Algorand. Meld Gold is tokenizing digital gold in the form of Meld digital gold certificates. Like Digix Gold, each token of Meld Gold is equal in value to 1 gram of physical gold. Meld Gold hopes to leverage Algorand's protocol to deliver gold that is fungible, transactable, traceable, transferable, and redeemable. And lastly, and perhaps the most unique gold-backed cryptocurrency of them all, is Goldcoin. Like PAX Gold, Goldcoin was developed on the Ethereum blockchain. Unlike the others, however, Goldcoin is not a 1-to-1 ratio. Instead, it holds a 1-to-1000 ratio, meaning that 1000 GLC tokens are equal to 1 ounce of physical gold. Goldcoin, developed in 2013, labels itself as the first fractionalized gold-backed asset, a feature that eliminates barriers to entry and ensures that even the smallest of budget investors are capable of owning gold. And that's all that we have for today's video. We hope you were able to get a good understanding of PAX Gold as well as its unique features and advantages. If you enjoyed the video, please give it a like and be sure to subscribe to our channel. Thanks for joining, and we'll catch you in the next video.